Now, as expected, inflation has eased once again to 2.8% in October. Now, this is very good news ahead of the South African Reserve Bank's MPC meeting tomorrow, where it will decide on interest rates. And for more on this and what to expect from the MPC, let's bring in Nedbank Chief Economist Nikki Weimar. Thank you so much for your time this afternoon, Nikki. So an easing in the pace of price increases was expected by most. Do you think we could expect further decreases, or do you think it will stabilize at this mark, perhaps a bit higher, more in the target band of between 3 and 6%?
Oh, well, we absolutely believe that, this is probably the trough. That's our view. But having said that, we were forecasting a 3.3% inflation rate for October, and it came out a lot better than that at 2.8%. So it's tended to surprise on the downside, but we think the big factor, and we can certainly see that in the numbers, have been the fall in fuel prices. And that starts to dissipate a little bit as we get into November, December. The key drivers there, of course, has been low oil prices. It's been also a firmer rand. And now the rand's been a little bit shakier as a result of the change in global dynamics. And global oil prices have ticked up a little bit as we enter the northern hemisphere winter, and demand tends to pick up. So we think this big factor that has contributed to inflation really surprising on the downside. It will ease a little bit, but inflation will still remain fairly contained. We see it ending the year slightly below 4 and then stabilizing just below 4.5% on average next year. So if you put that all together, it definitely is very good news for interest rates going forward.